Hello and welcome to Bloomberg Quint. We have R Mukundan, the MD and CEO of Tata Chemicals. This quarter has been a decent top-line performance, but the bottom-line performance has been affected and the margins have been slightly lower. So going into the first question, sir, what is the reason for your lesser margins this quarter and what will be your guidance?
We normally don't guide on any number. All I want to say is that the revenues have increased by 10%. The overall profits are almost flat, but the margin is under pressure because of the increased energy cost in the basic chemistry business. Broadly speaking, though, there are certain contracts which are annual in nature, and those contracts will unwind by the year end, and the margin should be tracking back to the normal levels in Q4 onwards. The overall demand-supply situation remains very tight, and the market conditions are in favor of suppliers, and that should aid this move going forward across all geographies. So our expectations is really that the margin would continue to improve going forward from here. There are no new supplies coming on stream, and the market conditions remain extremely favorable.
Your other income has increased considerably this quarter. What may be the reason for this?
Broadly speaking, there are three components to it depending on the segment which you look at. There is an element of higher dividends from subsidiaries in standalone. There is an element of foreign exchange gains which we've had during the quarter. And lastly, the higher interest income we've had from our cash position in the books. So all three have aided. Out of the 150-odd crore improvement which has happened in the quarter-to-quarter performance, 74 would be on account of the one-time benefit we've got because of revaluation of forex. But the rest two are all ongoing income which the company will continue to get even going forward.
What has been the underlying volume growth for your salts business?
Salt business has grown at about 10-odd%, but I think it would not be fair to compare. Last year, the same quarter, there were certain disturbances in the marketplace which led to that volume coming under pressure. So salt is back to where it should be, somewhere around 26 to 27% market share, and it would continue to grow between 4 and 6% in terms of annualized quarter-on-quarter growth. So that's really the trajectory it is trending. This quarter, the jump is mainly because of let's say, the tepid performance the business had same period in the same quarter the previous year.
How is the demand looking in the soda ash business?
So I just want to say demand across all the categories we are in is looking exceedingly strong. Whether it is in soda ash, whether it's in agrochemicals, whether it's in sea. So across categories, we are having a very strong demand situation. It varies from sector to sector. Soda ash demand, both domestically and internationally, is extremely strong. As far as the agrochem sector is concerned, the domestic demand, while it was impacted, the international demand is extremely strong. So overall, the demand conditions, the market conditions are extremely favorable, and we expect the situation to continue. Even the consumer business, the demand conditions for consumer business is continuing to be extremely positive. We see this trend continuing going forward.
How are you placed in terms of your energy cost? The costs have been rising of late. So how are you placed in that?
So I think the energy cost increase was fairly sharp between quarter one and quarter two, because many of the same quarter the previous year, the energy costs were in some cases as low as half the current number. So that did pull down the margin, as I said, but in our view, the energy costs have peaked at this level, and they will tend to remain stable or they would come down. By the same token, the market conditions have been favorable, so that has helped us to claw back some of the margin, and we will claw it fully back by Q4.
Well, how has the international business performed?
So for us, all the businesses, domestic and international, have been on a very strong wicket. We have continued to perform, improve our performance between Q1 into Q2 in Kenya, because Q1 was impacted by lake flooding. As far as Q2 is concerned, it's returned to normalcy. UK has performed well. The only issue there has been that we don't no longer trade in soda ash. We only sell the soda ash which we manufacture. So while the sales may be down, the overall profits will continue to trend up. As far as US operation is concerned, that's been traditionally our strong performer, and it continues to perform strongly. Compared to the same period last year, there was a reduction of about 50,000 tons, which was mainly on the basis of hookup of environment improvement equipment, but we would see that unit also trend back and claw back that number. In terms of bottom line, it is clocking extremely well in terms of per ton net realizations and net margins, and by Q4 we believe that numbers should trend further up.
How is your demand shaping up for your consumer product business, and if there any pipeline products coming up in the next quarter?
So consumer product business, as I explained, has grown 22% so quarter to quarter, same period in terms of year-on-year growth, and it will continue to trend that sort of a growth blended between various categories which we have. In terms of new categories, we will certainly announce that as and when we launch. We have a couple of categories in pipeline and should be coming back to you next 2 or 3 quarters.
By when do you plan to hit the retail markets via the general trade?
Sorry, we already have a range of products in the retail market, both pulses, spices, as well as salt, and also the various food mixes which have been launched in the market. As far as the new categories are concerned, as I said, the work is going on. I think some may be at the beginning to test in the marketplace in Q3 and some in Q4, but we will come back to you with specific details when we meet you next time.
What is your update on your the nutritional solution business?
In terms of our nutraceutical and the investment of 500 odd crores which we are doing in 50% in Nellore, which is nutraceutical plant, another 50% in Kadalur for silica plant in Tamil Nadu, one in Andhra Pradesh, other one in Tamil Nadu. I think both are on track and they should be commissioned by the last quarter of this year in 2019, early part of 2019. As far as the additional, as I mentioned, our capacities are running full, almost 100% in all units. The board has cleared another investment, additional investment of 2,400 crores and spread over next 3 years. Approximately 800 to 900 crore every year will be spent to further augment capacity, and this additional capacity will also come on stream every year in phased manner.
What is the consolidated debt levels in your books?
The consolidated net debt level is about 2,500 crore. The standalone has consolidated net cash position of about 2,500 crores. In terms of overall cash position, the standalone cash is about 3,500 crores and the gross cash position in the consolidated is about 4,500 crores. Broadly, that should be the number which should be looking at.
Well, multiple brokerages have reported that your company will turn debt-free by FY20. So what's your take on that?
Sorry, can you repeat that question?
Multiple brokerage reports have come over that you will be debt-free company by FY20. So what is your take on that?
So the standalone is also already net debt-free. It's basically net cash position. There is a small debt in the standalone books that should be repaid, I think, by next year. So I think the brokerages are absolutely right. The ECB of about 190 odd crores, which is still lying in our books, should also get repaid by 2020.
Your company had signed an MOU with CSIR to manufacture lithium-ion batteries. So what is the rationale for this partnership?
So this is first of the MOUs we have signed. We've also participated in the technology license which ISRO had opened up. So we are hopeful that should also turn out positive. But this is part of a larger plan of participating in energy transition in India as India moves towards renewable, and it will certainly need electric energy storage. And we believe a company like ours has a large role to play in that business. And the board has cleared a formal plan of entry into that business in this board meeting.
What is the investment you have earmarked for this?
Right now, I wouldn't want to give any specific number. We are working closely with our customers and with technology partners, and we will announce those plans as and when they are finalized. But certainly, we are looking at over a period of time, at least looking to be 1/10 of the 25% of India's demand, which is projected in 10 years' time. And broadly speaking, every gigawatt of unit which is invested is about 150 million. And we would be looking to scale that up in that kind of a market share over a period of time.
Can you help us with the details of the planned expansion at the Mithapur facility?
So as I said, the board has cleared an investment of 2,400 odd crores. This is a planned investment wherein there is it is completely renewable energy based on waste heat as well as solar as well as wind, and this investment will be done in about approximately 3 years' time, and the capacities will come on stream in a phased manner. 20% increased capacity in soda ash and about 40% additional salt capacity will come on stream.
So what sort of incremental revenue are you looking for from this expansion?
We'll come back with specifics on that. As I mentioned, it's broadly 20% additional soda ash and 40% additional salt. That's broadly the numbers.